The next question is, fishy business offers fishing tours and fishing supplies to customers. The business is owned and managed by Jerry Flathead, I should call him. Jerry has provided the following account information, and we've been given a whole heap of information here about the accounts of fishing tours or fishy business. All right, we've got some additional information which is about depreciation. So depreciation on the motor vehicle has not been recorded for the year ended 30th of June 2016. The motor vehicle is depreciated on a straight line basis. It has a scrap value of $12,000 and an expected useful life of 5 years. So it's straight line basis, scrap value of $12,000, useful life of 5 years. The fishing boats are depreciated using the reducing balance method at a rate of 15% per annum. Note to the round to the nearest dollar if required. Prepare the income statement for fishy business ended 30th of June 2016. All right, so we're going to prepare something. First of all, we want to be able to make sure that we classify our accounts. Now, there's a number of classifications. What we're going to classify them into is income, expenses, current assets, non-current assets, current liabilities, non-current liabilities, and equity. Now, because the second part says to prepare a classified balance sheet, so we're really doing numbers 1 and 2 all at the same time. So let's do that first. Accounts payable, current liability. Accounts receivable, current asset. Office expenses, well, it tells me there it's expenses, so that's easy. Fishing supply sales, well, that's income. Accumulated depreciation for motorboats, fishing boats and motor vehicles, well, they're both non-current assets. Capital for Jerry Flathead, which is equity. Cash at bank is a current asset. Drawings is equity. Fishing supplies and fishing supplies expense, so the fishing supplies must be a current asset. The supplies expense will be, obviously as it states, an expense. Goodwill, non-current asset. Interest expense, tells me what I need to know. Loan from Riverbank repayable in full in 2018. Well, we're doing this for 2016, so it's more than 12 months. So that'd be the non-current liability. This one's repayable in 2017, so it's less than 6 months, or it is, well, nearly 6 months. So it's a current liability, less than 12 months. Motor vehicle is non-current asset. Motor vehicle expense, easy. Fishing boats, non-current asset. Fishing boats repairs is expense. Rent expense. Fishing charters revenue, income. Staff wages and expense. And staff wages payable is a current liability. All right, now it tells me that this has not been recorded, so I obviously need to make some depreciation expense for motor vehicles and fishing boats. So let's calculate our depreciation first up. So it tells me that the motor vehicle's depreciation is used in straight line basis. Now my motor vehicle is here, 42,500, and it's got a scrap value of 12,000, useful life of 5 years. So my depreciation works like this, straight line equals my cost, I'll get that down there where you can see, minus my residual divided by my life equals my annual depreciation. So now my cost was 42,500 minus 12,000 equal divided by my life of 5 years. And that equals, where's my calculator? Switch him on. 42,500 minus 12,000 equals, no, that's wrong, I missed something. 42,500 minus 12,000 equals, divided out by 5, 6,100 per annum. So my annual depreciation, no, let's do my reducing balance method next. So my reducing balance So my reducing balance, what is this? 15%. So my fishing repairs, my fishing boats are 95,000. So my reducing balance is my cost minus accumulated depreciation times my rate. Now my cost, as we worked out, was 95,000 minus my accumulated depreciation, which is where here 18,000, and my rate we worked out to be 15%. So the calculation then works as such: 95 minus 18 equals 77 times 0.15 is 11,550. All right. Now that means that I'm going to have 6,100 as my depreciation expense for my motor vehicle, 6,100, but I'm also going to have 11,550 for my fishing boats. So that's my depreciation expense. So I've got two more items in my income statement than I previously would have had. But also that means that my accumulated depreciation here is incorrect and here is incorrect. So I'm going to have to add in 11,500 to my fishing boat. So 18,000 plus 11,500 will give me 29,550. I should say 550. And 6,100 plus my 6,100 will give me 12,200. So I just cross those out so when I'm preparing my income statement that everything works out okay. Now the next step is to prepare that income statement. So we love headings in accounting. So I'm going to write my income statement for fishy business. For the year ending 30th of June 2016. Now if you're ever wondering, is it, because this is the most important bit for the year ending, if you're ever wondering, have a look down here in the question because it tells me it's for the year ending. Okay, balance sheets are a little bit different because they're static. It's an as at for the balance sheet. Now I'm going to prepare my income statement. So first I'm going to put in my income and I'm going to do fishing charter fees revenue, which is my first item. Charter revenue. Which comes in at 115,250. And there's another revenue somewhere. The income. Here we go, fishing supply sales. Supplies. And that is 10,000. I can tick that one off as well. So that gives me 125,250 as my revenue. Less expenses. Now because this is a service business, and we know that because they have a fees revenue, there's no cost of goods sold. So it's really, there is some fishing supplies, but that's not cost of goods sold. Okay. So I'm going to go down my expenses. I'm going to start at the top and just work my way down the list. So I've got office expenses first. Office expense, 6,000. Fishing supplies expense. What is it? Fishing supplies of 25,000. Interest of 3,500. Yep. Motor vehicle 8,000. Boat repairs 5,500. Rent, 10,000. Staff wages, 35,000. And just so that I know that I'm reminding myself, we've got two depreciations. Depreciation, motor vehicle, 6,100. And fishing boats, 11,550. Quick scan to make sure I've got them all. Office expenses, yep, got that one. Yep, got supplies, got interest, got motor vehicle, got it. Yep. Oh, why have I ticked off this 650 staff wages? Cross that out. All right, so let's add up my motor vehicles, not my motor vehicles, my expenses. So I've got 621, let's do it the easy way. Plus 25, plus 3,500, plus 8,000, plus 5,500, 10,000, 35,000, plus 6,100 equals 80,650. That seems a bit low. 80,000, I've got 25 and 35 makes 60, 70, 80. No, that's got to be higher. I made a mistake somewhere. Let's do that again. 6,000 plus 25 plus 3,500 plus 8,000 5,500 plus 10 plus 35 plus 6,100. That seems a bit better. 110,650. 110,650. Now I'm going to deduct that to see if I can get a profit. 250, and I get a profit 14,600. That's my profit. So that's prepared my income statement. The next thing we need to do is to prepare a balance sheet.